This webinar is proudly brought to you by IG South Africa. Visit igmarkets.co.za to open your trading account today.
Thank you, Simon. Welcome, everyone. Today we're going to have a look at the difference between analysis and trade execution. I thought I'd just take you through my morning ritual and try and point out the major differences between the two terms. What I have here is OmniTrader has run its scans this morning based on the systems. I've got CML firing me a buy signal based on trend fishing. I can now go and have a look at the actual chart. Now remember, just because a system fires doesn't necessarily mean that it's a trade. The first thing I want to do is look at support and resistance. And I've got pretty clear head and shoulder pattern on CML. The other thing I want to do is just draw in a trend line and check the slope. So there we have the blue trend line telling me CML is at resistance. It's also at the 21 exponential moving average. The oscillators have fired buy signals. The one thing that does concern me is that price has gone below support. But if I move my trend line down a little bit, I can see that it has actually bounced off the wick support levels. So a bit of a dilemma. I think the simplest way to do this is if coronation opens up this morning above that 95.50 level, above the trend line, I could consider a long trade. So we just add CML excuse me, we just add CML to the watch list, and when the market opens later on, we'll go and have a look and see how it opens. So that's the analysis part. Now I wait for the execution. Analysis says I should be long, trend is up. Moving averages are close together. Excuse me again. And that just tells me that momentum could be dropping to the downside. If the 21 crosses below the 89, well, then I can't be going long on the stock. At the moment, I would require a break above the blue trend line. Next stock, Occidental Petroleum. I do have offshore shares in here. Here we have Occidental has actually broken support. If we put our little trend support line in over there, we can see Occidental has closed below it. So yesterday it fired a warning signal. Today it confirmed, and well, it's broken below support. There's no ways we're going to trade that. We can wait for the next signal. Dow Chemical. Again, trend is up. It's fired a reversal pattern. So we can just load up the reversals here. And we can see that momentum is well oversold. We've got the MACD histogram giving us a little bit of divergence over there. And we have a buy signal. First thing we want to do, support and resistance. Okay, so Dow Chemical has come down to support. Yesterday it closed as a green candle. However, it did not engulf the previous two candles. We do have a hammer 3 days ago, there on the 8th of July. So Dow Chemical is definitely a potential opportunity. I'm just going to draw in some angular trend lines and see where we stand on the stock based on those. Just using the candle bodies here. Alright, so there we have it. Should Dow Chemicals break above the initial trend line, we can consider an entry. Again, the analysis is trend is up, it's fired a reversal pattern, and we can now just wait for the trigger. And that is where the difference comes in. Now, if you just analyze a stock, trend is up, it says we should buy. If we just bought it, we're asking for trouble. We need to have a trigger as well, and that's where the trade execution comes in. So analysis is the first portion. It tells us which instruments we should be trading and which direction we're looking at. And then the trade execution comes in on the actual trigger being fired. So Dow Chemical on support, waiting for a break of that trend line. The reversal pattern has fired, and now we wait. On Anglo Gold, Anglo Gold fired on a medium breakout. It's a volatility system. Price is above the 100 EMA, trend is up. Anglo Gold has broken the trend line. It fired the signal, and yesterday it basically confirmed the signal. What I don't like are the gaps. The other thing I don't like is the stop loss. If we work on a risk reward ratio, and I'm going to enter somewhere at 196.36, where do I put my stop? I can put my stop over there at 185. That would be old resistance, potential support in the future. The 1 to 3 risk reward would put me up at 227. So that would be one option. We have some resistance at 210. We've broken previous resistance at the 194 level, 193. So from a trade perspective, or analysis perspective rather, Anglo Gold is bullish. From an actual trade execution, I think the percentages are probably against us right now. I would like to see Anglo Gold pull down a little bit and then look for an entry. If I change this to the trend fishing system, I can see stochastic overbought, and we have some serious divergence over there. So Anglo Gold is a potential trade on a CFD basis, but I don't think it's triggered right now. If we go to United Technologies, this is quite an interesting one. Trend fishing has fired, and it's basically confirmed the trigger from yesterday. Now what's happened subsequently is yesterday's close pushed the 21 below the 89. That for me is a definite no trade. There's a couple of other things. That support level could be snap and crack based on Steve Nissen's candles. Let's just have a look. We put a support line in there. That little wick there probably negates that idea, and the candle didn't break below support. So this could be a really interesting trade. One of the other concerns I have is this rounding top formation. If I put my trend lines in, put it in like that and take it across the tops here, I can just see that momentum has definitely dropped off on this stock. The moving averages tell me momentum is to the downside. What I can do is see how United opens this morning, their morning, so it'll be our afternoon. If they open up, they carry on rising from that 113.50, I could institute a small position. So I'm going to add UTX to the watch list. I'd like to watch that on open. The analysis says that this is a medium to high risk trade. The risk reward analysis, let's just pick an entry point. If I put my stop loss just below support, I have a good potential 117.97. That ties up with an interim resistance level. So certainly this stock does look interesting at the open. We'll keep an eye on it. Ford Motor Company. We have a resistance level there that was broken. It has now fired two signals on the medium-term breakout. So volatility has increased. The candles are moving higher. The close was higher than the last 15 candles, and it was above the 100 EMA. Ford certainly looks to be bullish. If we put in again risk reward, we want to be entering somewhere over there. Where do I put my stop loss? If I put it here, I've got a tiny risk, but I've got a high probability of being stopped out. So, excuse me, we will just work it out based on that swing low. And we can see it's going to require quite a move to new highs for Ford to actually work out. That tells me it's a medium to high risk trade. If I just use that resistance level, the green line there, am I going to make any money? Well, from 1711 to 1778, it's not too bad. It's not fantastic. But the idea with the medium-term breakout is exactly that. It is a breakout strategy in the direction of the actual price. So we have, according to that strategy, an uptrend, and we can see the higher lows all the way through. This is a really interesting trade. I would be prepared to put some money down on Ford. and just use the swing low as a stop loss. It gives me from, it's a dollar trade, and I'll take a chance on the 20 Rand target, 19 Rand target over there. Remember, it's a breakout trade. Previous resistance becomes not irrelevant, but less important when deciding on whether to actually make this trade or not. From a triggers perspective, we could look at the resistance line being broken. That's going to start messing around with our risk-reward ratio. I'd have to move the entry point up higher and push my stop lower, and that changes my target price based on a risk-reward ratio of 1 to 3, and $20.26 is the target for Ford. You can do that. Be aware that you are close to resistance, but when it comes to these breakout trades, previous resistance can be taken note of, but it's not enough to keep me out of the trade. Facebook. Alright, so here we have Facebook. I've got some support lines drawn in already. That would be the swing low, major swing low. It has broken the interim resistance level and is now trying to find support there. It's bounced on the 89. Trend fishing has fired, and that's quite simple. We just have a look at the history. Facebook has worked pretty well on the system. It's now firing a buy signal. We've got some Harami type candle patterns. I would certainly be looking at Facebook this morning. And again, the entry would just be a move higher. I'd like to see it move higher on open. I'd move my stop loss to just below that interim swing low support level. And then we can work out the targets. Now, it's just less than 3. So it's a risk-reward ratio of 1 to 2, 1 to 2.5. I think that's pretty decent on Facebook to go to previous resistance. If it breaks above that, I can use that $75 as a target. So Facebook certainly can be on my list this morning. Walgreen has fired a reversal. We can see over there it's fired up based on the Harami pattern. It's not on support. I'd like to see it come down to support before I look at it. The two oscillators just crossed below the oversold levels. So Walgreen, I'll just wait and see what happens on that one. Comet Technologies. This is interesting. It's fired a buy signal on the 21 moving average there. It's a trend fishing signal. I can see the RSI has popped above 30, fired the signal, confirmed the signal. But what I don't like on this strategy is when we are quite near to resistance. We look at the history of this chart. It's got a history of the moving averages not really giving us a return. So Kame, I would rather leave off my watch list based on trend fishing. I can see by looking at the chart that the system doesn't really work on it. Goldman Sachs has also fired along based on trend fishing. First thing I want to do here is just have a look at the history. Has it given me good results? Those two trades were good. Not so great, not so great, not so great. That was a nice trade. Nice trade. Not so great. There's a good trade. So it seems to have sort of a 50-50 hit rate. If I look at it in the near term, so let's say over the last 12 months, the chart doesn't look very bullish. Yes, the moving averages are up, but they're just moving averages at the end of the day. We're going to go, I'm just going to put some trend lines on. Point A to point B. It's broken back into the range. That would put me off immediately. Goldman Sachs not holding above support. It's holding on the 89. If it returns back above 165 and breaks back above that trend line, I could consider the entry. The analysis says no. It's broken back into the channel. Not really interested. Then we can go and have a look at Boeing. This has fired a longer term trade. It now says that the trend is down on Boeing. We can see it's made a lower high. What it hasn't got is a lower low. If you were holding Boeing physical stocks, you would consider selling now. As a short-term trader, you might consider selling the breakout except that it closed above that support level. So Boeing, we just wait and see if it fires a different signal. On Truworths, okay, we know the retailers have been under pressure in general, apart from Mr. Price. We've seen Truworths in a long-term down channel. The trend is down again. It's fired a short signal on trend fishing. I'm certainly interested in this one. The trend line would be drawn like that. So for all intents and purposes, Truworths has fired a short. It has confirmed. I would like to see this morning's open lower than yesterday's close. You can maybe give it the first half hour of the day and see if it confirms. And remember, the support level is important. It wouldn't be enough to keep me out of the trade. But if Truworths starts to bounce there, I'd consider just stopping out. It would be therefore be a medium risk trade, and you wouldn't put your full position on. The stop loss would simply be above the resistance of that little bear flag. So you can always go look up the rules for bear flags on the tradersplace.co, or you can have a look at just one lap. We did some rules on those. Okay, so analysis says trend is down. The moving averages say trend is down. Channel line says trend is down. RSI stochastic overbought. It's broken a little bear flag. I'll certainly be looking at Truworths this morning. Okay, so that gives us the shares. I've got 3 potential trades in CML, United Technologies, and Facebook. When their markets open, we're going to have a look and see what happens. And of course, we have to add Truworths to that list. So add it to Watchlist. Then when the market opens, we go and look at trade execution. So the major difference is, done the analysis, a lot of signals are fired. The analysis has told me which ones have potential and which ones do not. And obviously every trader is different in the criteria that they use, but please remember to separate the analysis portion from the actual trade execution side. The trade execution is where we make or lose money. Analysis is easy. Trend is up, so we're looking to go long. How we enter that trade is quite important. Now we can just go and have a look. I thought I'd do some Forex as well. A little bit of a follow-on from the Forex webinar, the introduction to Forex webinar I did a while back for Simon for just one lap. Okay, so I'm going to start with the Aussie dollar, Canadian dollar. The trends are down on all 3 time frames, so we should be looking for shorts. Is there a signal? Not at the moment. The trends are well established in all 3 time frames. Australian dollar, Swiss franc. I can see on the daily, the trend is up. 21's above the 89. What is interesting here is we have a potential bull flag. Trend is strongly up. Once I know the direction, I can find rule-based reasons to make trades. Now a bit of a widening pattern, but I can use the upper trend line. If it does break above there and close above there on the daily chart, I can consider buying into the Aussie dollar, Swiss franc. The smaller time frames, the hourly is consolidating over there. I could get an earlier entry. Again, you can just draw your support and resistance lines in, and a break above that would put you in the direction of the daily chart trend. Okay, so Aussie dollar, Swiss franc, there are 2 different time frames giving us an opportunity to trade. The hourly, break above resistance, give us a long. Daily, break above that widening pattern, can give us a long. Both of them in the direction of the long-term trend. Aussie dollar, Japanese yen. The trend is up on the daily. We can see 21 is above the 89. Prices come back to the 89. Certainly a potential trade. We can use one of the shorter time frames to get into that position. The hourly seems to have a nice little pattern. Again, just draw in your trend line. There we have it. It's not a very neat pattern. I'd probably wait for some other confirmation. That pattern is not very neat, not very clear. So Aussie dollar, Japanese yen can go on a watch list of potential triggers, but it's not firing right now, and there's nothing clear at the moment. Aussie dollar, New Zealand dollar. Obviously Australia versus New Zealand. We have a huge downtrend in the Australian dollar versus New Zealand dollar. You can see I've got a couple of trend lines drawn in, a couple of support and resistance lines, and the Aussie has broken lower. The trend has changed from up to down. So we've got the 21 below the 89 over there. We've had a retracement to the 89, and we've got two angular trend lines that have been broken. It's continuing lower. So the trigger was actually a couple of days ago. We could use one of the smaller time frames. Here we have a bit of a bear flag building on the 4-hour chart, and certainly on the hourly chart there's a nice clear reversal type pattern. Price is zigzagging. That is normally just showing a retracement before a continuation of the prior trend. So certainly Aussie New Zealand is on the watch list. Aussie dollar US dollar. Trend is up, but price is really choppy. So Aussie dollar US dollar, the trend might be up, but that price is really sideways. I'd rather stay out of that one. Canadian dollar Swiss franc. That's a bit of a neater chart. Trend is up. Price is holding on the 21 EMAs. Unfortunately, the 4-hour chart has already broken resistance. We can now just use the hourly. If you wanted to enter the trend, you could use a trigger on the hourly, but the triggers are long gone. So wherever I put my resistance line, price is already above it. You can wait for price to pull back again before you look at the longs. Canadian dollar, Japanese yen. Okay, we've got uptrend. Price is pulled back to the 21. The 4-hour chart, it's whiplashing around the 89. There's no clear trigger here. Let's go and have a look at some of the euro trades. Euro CAD. We know now that the euro has been massively under pressure. If we look at the history, once the moving averages crossed over, we could have taken support line breaks as entries. Stop losses could have been previous swing highs, and you would have been quite happy with your trade results at the moment. Trend is strongly down, continues falling. You can find a reason to trade the direction of the daily trend. And again here, got a support line break. We could have traded short there. Euro US dollar. You can see I have a position in. Price crossed over, 21.89 crossed down there. The price reversed, hit the 89, fired a reversal. Quite happy to take that trade short. Trend is down. I don't need to think too much about it. Goes back to the 89, confirms by moving lower during the day and into the trade. For right now, you would probably have a support line down at the bottom. So we just put in the support level on the 4-hour chart over there, which is the same as the daily chart over here. You can just put your support line in there. The confirmed break below those support levels could easily see you enter a trade short. So the analysis part is relatively simple. Identify the product you want to trade using whichever analysis criteria you've got. I'm focused on the trend. So the trend tells me to go long or short. The trading rules then tell me how to set the trade up. Now, trend is down on the euro dollar. It doesn't mean I just go and sell this thing. Wait for it to pull back. Take the trade short. Try and get your stop loss as close as possible to your entry price. Just put it at the swing high, so up there at 37013 is my stop. The risk is 27 points. Potential target 1 is 150 points. My risk reward ratio is better than 1 to 1. I'm happy to make the trade and then wait for it to work out. Alright, I hope you found that informative. You're welcome to contact me if you have any questions about this webinar. And let's see if we have any questions. Please feel free to email me any questions that you have. Thank you.
This webinar is proudly brought to you by IG South Africa. Visit igmarkets.co.za to open your trading account today.